Hello guys, welcome again to another BTC video. I hope you are doing great today. I have a nice video for you today regarding Bitcoin. We're going to talk about the similarities between BTC and the S&P 500, like a potential macro prediction for BTC that could happen down the road. And we're going to talk about the micro time frame for BTC to see what's going to happen in the next coming days or weeks. And we're going to talk about the actual macro time frame from my personal opinion, according to the indicators and the charts. So stick around till the end of the video. It's going to get very, very interesting. With that said, I'm going to jump straight to the charts and talk about the similarities between BTC and the S&P 500. Now, believe it or not, back in August, I think, or September, I was talking about a potential double top market formation for BTC. It is always there. It can happen. It has happened before in markets like the S&P 500 between 1990 and 2010. So why not for BTC? Usually charts are not some secret like magical weapon or some voodoo thing that we do. They're actually just human psychology and market behavior just on a piece of paper drawn, so we can analyze it even easier than others. So if this was human behavior in the S&P between 1998 and 2010, why can't this happen also in BTC? Humans are still the same, right? They still think the same way, especially when it comes to investments and money. So with that said, look at the S&P 500 here, double top market, perfect formation. Bitcoin, double top market, perfect formation. And the similarity between these two are actually uncanny. So why am I bringing this up? Because I want you guys to imagine that this is 30,000 K BTC, 30K BTC level, or 28K BTC level, and this is here 30K BTC level. Look what happened to the S&P after that level was hit. You pumped, you formed a double top formation, and then you dropped below that level. You formed a V-shaped recovery and you bounced to the moon. So this could be very, very, very likely in the cards for BTC. Especially, so the warning sign will come is if you see BTC tapping 30 again. If you see BTC tapping 30 again, the likelihood of this scenario where you can see here, it tapped 30, it bounced slightly and then it dropped. This scenario of tapping 30, bouncing and dropping again is very, very likely, and then forming a V-shaped recovery and a blast off to the moon. It's in the cards for Bitcoin because it happened for the S&P, so it can happen also. And this is actually the most likely scenario with the whole adoption that's happening with BTC. I don't think institutions will allow us to get cheap BTC. And I think a V-shaped recovery is the only way they can get in and not allow anyone to get in fast enough and then, just blast it off. Because if you're going to let BTC go to sub 25,000 and let it range there for a while, people will go in. A lot of people will start accumulating and not many people will miss out. But if there's a V-shaped recovery, many people will get scared to buy the dip because it is the red, and that V-shaped recovery after it happens, basically no one will get the chance to just buy again. You're going to be too late if it happens. So this is very, very likely in the cards for BTC. A wick to 23, so a dump to 30 or tapping 30, a small bull trap, and then a dump to like 25, and then a B-shaped recovery, and then a bounce. Very, very likely for BTC down the road. Now, in my opinion also, I believe if BTC taps 30,000 again, I don't think the $30,000 region will hold. I think it will bounce temporarily, just a short-term bounce, just to build more long positions, and then after that I think the market will liquidate these long positions because of the fact that traders like to long support and short resistance, and that's what happened around $60,000. It was resistance, many traders were shorting, including myself, and then a bounce happened basically to try to liquidate all of these traders, and that bounce was a $10,000 bounce. And here around $40,000, many traders were longing 40,000 again because 40,000 is support. And what happened after was a liquidation drop to the downside to liquidate all of the long positions that were here. That's what basically happened. Many people were longing here. No one was actually shorting there. Very, very few people. But many people were longing there, and then bam, drop comes. And this whole scenario of market makers trying to get that liquidity from people who long support and short resistance is always going to be in the market. Now, tapping 30 makes this scenario more and more likely because we already have confidence in 30 as a strong level of support. We don't think 30, like as a trader, I will long 30 as well. I'm not going to just short 30. So that confidence that we have of longing certain resistance or support regions, that's what makes market makers basically go for those liquidation moves. Plus, not to mention that we have a May scenario here that is in the cards here. So many people are saying that this is very similar to May and it can happen again. So the confidence in the bull run is still here. No one's accepting that the run is over. No one wants to accept that the run is over. So that's why I think that if we tap 30 again, we will bounce on the first bounce, maybe bounce 2 times, 3 times there, but finally 30 will not hold. Something similar to what happened here, where we basically bounced around 40 for a few days, like a week or something, and then we dropped finally. So it's in the cards. This is very like, sorry, excuse me, it's around, yeah. Oh, here, yeah, around that area. So this is very, very likely in the cards. Same should happen here, by the way. So we were bouncing here. Support was $45,000. We did a fake bull trap and then we dropped again. Oh, long, and then we dropped one more time. We were at 40. Oh, long, 40 support for, and then we dropped one more time. And this is what the market's gonna do all the time. Same scenario here, by the way. The only difference between here and here is that people were shorting there because it was a bear market, aka a bear market, but the pump came to liquidate the shorters. So once you saw people like Carl the Moon who were saying, I'm going to short BTC at 29,000, that was your signal of, okay, the pump is coming. And finally, the pump did come. Now, when people go to 30 and you see people like him as well longing 30, oh, Bitcoin is the last chance to buy 30K Bitcoin. That's where the signal comes, where the warning sign comes about a potential drop to the downside to liquidate all of those longs. Best case scenario, we repeat this S&P 500 drop where we drop to 23.5 in my opinion, and then V-shaped recovery and bounce, which will not allow any people or any traders to get in or out as fast as they can. So they probably miss out many gains, and many people will sell at losses because they will expect probably lower. So that's the best case scenario. Worst case scenario for BTC is you drop to 30, consolidate, bounce, drop again, consolidate, drop to like 23.5 and then bounce and then get rejected at 30. If you get rejected at 30, you're probably going to see 13 or 14,000 BTC. You're not going to see 20,000 only, because there will be a short-term bounce there, but finally you will reach that level in my opinion. Now, why that level? It is a Fibonacci level. Number one, it is a Fib level. Number two, it is an area of support confluence from the past. So if you can see here, well, I cannot show it. Well, I can. And let me pop up the BTC all-time history index, which shows us the history of BTC throughout the years. So if you pop this up, and we can see right there that this area right here, which was your 2019 local top, was around 13,800, and there's a strong area of support around that region between 11,000 all the way to 14,000. Like, it's very, very strong. We're talking about years and years of accumulation on that area. That area will bounce no matter what. But we're too far off. I'm talking and nothing still happened. We have our confirmation levels. We have our validation levels. We have our invalidation levels. So we know if we see BTC over there at 30 and BTC does bounce, then we know that the more we tap that 30, there will be a potential to basically break it. And of course, I will try to keep you updated if I see any warning signs. For now, if we're going to go to the daily time frame for BTC, I do see a potential bullish divergence on BTC. It's still not confirmed 100%, especially the indicators. They still haven't given you that long basically, or that finalization of that of this drop. I still believe that we will see one more wick to around 33,500 to 34,500 region one more time, and I do believe that we will get rejected around the 37,000 mark, because the 37,000 mark, if you believe it or not, which is around this area, is a macro EMA. So this macro EMA was support. Actually, slightly a little bit above, so around 38,000. So between 37 to 38,000 rat region, I think it's a potential rejection region, because support broke and then it will flip to resistance and a rejection will happen there. If the rejection happens there, be careful, because this will drop one more time to around 30,000 or 31,500 to that next EMA, that 30 EMA on the monthly chart, which will probably provide us, like I said, with a strong bounce and potential bull trap region to start from there. So that's where your bull trap will start, in my opinion. But what happens if we do close above $38,000 and we do close above $37,000? Well, that will be very bullish for BTC, and I'll update again. But in my opinion, in my personal opinion, it's not gonna happen. That's just my personal opinion. We will see a weekly close. Actually, I'm not really interested in the weekly close today. I'm very interested in the monthly close. That's what I'm looking for. Monthly close is going to be so important for me. If the monthly close closes below $38,000, then this will chop around this region for a while before doing a bull trap and then dropping again to 30, another mini bull trap, and then drop again to sub 30 with a potential V-shaped recovery. That's the best case scenario. And in my opinion, the proper rally to the upside will happen around middle of February, and it will last till middle of March or middle of April. And I think the final crash for BTC, where we go sub 20, is going to be around May, in my opinion. Early May, mid-May, that area. Now, it could happen faster than expected. I like I said, I cannot really predict the future. I try my best to give you guys the information that I see in front of me in the charts based on probability. So I'm just giving you my expectations and what the charts are showing. And to be fair to both bulls and bears, I'm giving you as well levels of confirmation and validation and invalidation. So level of confirmation of a potential drop to 30 again, and then losing 30 is if we close the monthly candle below $38,000. If the monthly candle closes below $38,000, actually we're already bearish by this. Even here, even if we close above, we're still bearish. But we might have a better bull trap if we close above. If we don't close above, we close below, then the bull trap will not be as people expect. It might be a weaker bull trap. So yeah, that's the level of validation of the bear scenario. Whereas the bullish scenario, in my opinion, we need to go to $45,000 by the end of the week. $45,000 to $42,000 by the end of next week. If we do manage to close a monthly candle around that area between 45 and 42, then we change, and then the bull run will continue. If not, then the bear scenario and the bear market will be more likely, because in my opinion, the bear market is already here. We've crossed bearish on the MACD, like I said earlier, on the monthly MACD. We are sub 50 on the RSI, and we're basically crossing bearish on the stochastic below 20. All of these indicate a bear market on the monthly time frame, and this is just the start. Hopefully it will be a different type of bear market where, like I said, where we just drop here to 30, consolidate, do a mini bull trap, drop to 30, then lose 30, wick with a V-shaped recovery, and then bounce. And then we don't get this red valley, which is basically a stronger correction. But if not, and we do drop sub 30, and we don't see that V-shaped recovery, then we get rejected on the bounce to $30,000, then you know that 13,000 or 14,000 BTC will be in the cards down the road. But it's too early to talk about this right now. Let's take it step by step. Monday, I think the markets were open selling, not buying, in my opinion. I saw the S&P chart as well. It looks very bearish. I don't think we will have a pump on Monday. Hopefully I'm wrong. But if I'm right, just be careful. There will be a lot of volatility next week, especially with the stock markets crashing. It all will come down to the Federal Reserve. I think Monday will be a drop, and then Tuesday, Wednesday, we start a small rally to the upside with that bullish divergence on the daily time frame for BTC. That will give time for the Fed to come up with a decision, which will likely be a positive decision towards the market, not a negative decision. But from now till Monday, even late Monday, I think we're not gonna really go up much. Any up that we have is going to be probably a rejection and more downside. So yeah, guys, that is it for the video. I hope you enjoy. Please like, please share, please subscribe. Please make this channel grow so I can keep providing videos like this down the road for you guys. Follow me on Twitter. I post a lot of information there. I posted the drop around 43,500. You can go check it out. So the warning was there, and I post many other things. And if you want to inquire about my private paid Discord group, you can message me on my private Telegram, link in the description below. And yeah, I'll try my best to answer any questions that you have. Thank you again for watching the video. Enjoy your weekends, and I'll see you again next week. Bye bye, guys.